Hello again, and welcome to the next installment of the Borrowing Money Workshop, Know Your Budget. Thank you for continuing this educational experience. You've almost completed the workshop as there is only one more module to go after this one. I hope that you will stay with me and complete this important course. As always, I am your host and content creator, Joe Miller. So let's recap what we have learned so far before we get into the most important segment of the workshop, Know Your Budget. The foundation to successfully borrow money is comprised of four key components: know your income, know your credit, know your budget, know your purpose. Each one of these components is important, and a good understanding of all four is essential to success. By building a solid credit foundation, you will be able to control your loan narrative and obtain the loan that works best for you. Because at the end of the day, you need the loan that is best for you, not your lender or bank or car dealership. A loan that fits within your budget can be easily repaid with your income and has the best terms and interest rate based on your credit. If you don't have a solid foundation and an understanding of your income, your credit, your budget, and your purpose, then you are susceptible to get talked into the wrong loan terms or buy something that you will soon regret or realize that you can't afford, even though the sales agent or lender said that you could. Or you could have paid more in fees, paid a higher interest rate, or had to put more money down than you wanted to. The bottom line is that you were getting a loan on someone else's terms and not on your own, thus potentially costing you thousands of extra dollars in additional finance costs. The first key to successfully borrow money is to know your income. Understanding the difference between how much you earn, your gross pay, compared to how much you actually make, your net pay or net income. When a lender or loan officer is reviewing your income, they are basing their income calculation on your gross salary or hourly pay over the last year or two. That amount could include additional pay such as overtime, commission, or bonus income that you have decided not to include in your budget for your new loan. Or you are basing your budget on the 4 times per month pay method or the 2 times per month pay method that was discussed in the Know Your Income segment. The second key to successfully borrow money is to know your credit. Understanding what is in your credit file and what is your credit score is very important so that you can get the best interest rate and terms based on your credit profile. This will also help prevent you from being sold or offered a higher interest rate than you would otherwise qualify for. We also discussed the importance of reviewing your credit file on a regular basis, so if there are any discrepancies or potential fraud, you can catch and correct it before applying. Also, keeping your credit file clean and accurate will help you with non-borrowing related transactions. This includes reducing or eliminating rental or utility deposits, not getting hit with a surcharge or having to pay a higher insurance premium on your auto or property insurance. As you can see, there are many advantages to having good credit that extend beyond loan terms. As a reminder, you should freeze your credit report with Experian, Equifax, and TransUnion. It is easy to do and easy to unfreeze when you decide to apply for credit. And it's free. This significantly reduces the chance of any fraudulent credit activity occurring against your credit. So ask yourself, how many days do you really need to have your credit available? Maybe a total of 5 or 10 days throughout the year. That's why it's a good idea to have it locked and secure the other 99% of the time, just like you do with your car or where you live. Now let's get into the training. As discussed in the Know Your Income video, the lender, the bank, the car dealership, or the finance company are looking at your income from a gross income perspective. They are basing their approval on how they calculate your gross income the same way they calculate for everyone else. Also, this gross income could be inflated to include other pay from overtime, commissions, or bonus pay, especially if you have received this extra pay over the last 2 years. With this other income added, it will tell you that you can now afford to buy a more expensive car or a bigger house. But the sales officer or sales agent's involvement and influence ends once you sign the loan agreement or contract. It is up to you to repay your new loan. But as we learned from the examples in the Know Your Income video, this is where you can get into trouble and lead to a repayment problem down the road if you only follow their advice. Especially if the income sources, the amounts, and types are substantially different than what you plan on using towards your repayment and your budget. Also, keep in mind that any extra pay for overtime, commission, or bonus can be easily discontinued or stopped by your employer. This is where the budget section of the Borrowing Money Workbook will help you decide how much of your income you're comfortable using. You may decide to only use your regular or base pay income, or choose to only include 50% of any overtime or commission income, or choose to base your budget on the 4 times per month pay method or the 2 times per month pay method, as we discussed in the Know Your Income video. What I would recommend not doing is to use all your income from any overtime, commission, and or bonus. The budget section of the Borrowing Money Workbook will help you decide how much of the other income, if any, you're comfortable using and how expensive a car or property you're comfortable buying. Each budget section gives you 5 scenarios so you can see how the changes affect your outcome or cash flow. You can adjust your income, adjust your bills, adjust the size of the house or car loan, adjust the interest rate, and see how it will affect your monthly cash flow. Knowing your budget is critical to being able to repay your loan. I know when I do my budget, I use the twice per month pay method since I get paid every 2 weeks. I also base my budget on my regular salary or base pay net amount and put any bonus money received into my savings account. This ensures that I have a cushion for any repairs, surprises, or vacation plans. The key is to find what net income method works best for you and to build your budget around that. Now let's dive into the budget. The first thing you notice that there is a mortgage budget for a real estate transaction and a loan budget for a large consumer purchase such as an auto or boat, RV or appliance purchase. After you choose the budget to complete, start by filling in the first column for current budget. Take note that what is in white is edible or writable. Fill in your current gross monthly income as calculated from the income worksheet. Then determine what is the net monthly income or net monthly pay that you want to use. After that, fill in the rest of the housing expenses, utility expenses, and any current loans or credit card payments you may have. For the minimum payment on any credit card debt, I would recommend using 10% of the balance as a monthly payment for the budget, but definitely no less than 5%. Notice on the left side of the worksheet there are tips and reminders. The goal is to have a positive monthly cash flow as well as to have a housing ratio under 36% and a debt to income ratio under 45%. However, keep in mind that the preferred or best ratios are for the housing to be 28% or less and for the debt to income ratio to be 36% or less. These two ratios are basic benchmarks that lenders typically use, whereas the monthly cash flow is what you should be using to determine whether you can afford what you really want to buy. The goal is to have a positive monthly income with some cushion, extra money, so that the higher your monthly cash flow is above 0, the better. Once you have your current budget built, you are now ready for the fun part. There are 5 scenarios where you can play with the numbers, so to speak. Change the purchase price and down payment. Look at how a change in the interest rate will affect your loan payment. Be sure to include any new expenses related to your real estate purchase, such as new utility bills, homeowners insurance, homeowners association dues, maintenance expenses, such as lawn care service. If you are purchasing some type of vehicle, then be sure to include the added costs associated with the purchase, such as insurance costs, added maintenance costs, and added fuel expenses. All right, so here are a couple of housekeeping items. If you live in a state or moving to a state that has a real estate or property tax and you're looking to purchase a property, then make sure that you add in the cost of the estimated real estate taxes. Enter that amount in the top portion of the mortgage purchase budget. If you are currently living at home with no utility expenses and are getting ready to purchase your first home, then I would ask a family member, your real estate agent, or a trusted friend or coworker what they currently pay for things such as electric, water, gas, internet, so forth. If you are purchasing a property and are putting less than 20% cash down, excluding the second mortgage, then the worksheet has a built-in formula to calculate an estimated mortgage insurance premium expense that then becomes part of the mortgage loan payment. The added mortgage insurance premium is an estimate and not exact to each lender or insurance company. If you know that you are going to have future expenses such as added child care costs or student loan repayment within the next year or two, then I would add that expected obligation or estimated payment in the scenario section. If you added back the pre-tax child care or dependent care reimbursements or pre-tax HSA, FSA, or computer reimbursement accounts that some employers offer to your net pay calculations as instructed in the Know Your Income workbook section, then be sure to add the actual monthly and most likely higher cost of that expense to your budget. If you did not add those amounts back to your net pay, then be sure to only add the difference between what is currently being deducted from your pay and the actual monthly expense. Feel free to pause your training video while you finish your budget, as this may take a little time to complete. This is an important step, so you don't want to rush through it. Congratulations, you've now completed your budget and decided which scenario works best for you and your budget. And that scenario should produce a monthly payment that is below the typical ratio thresholds that the lenders rely on. You have now completed 3 legs of the chair and only 1 more to go before you can sit and rest comfortably. Your foundation is almost complete. Armed with the loan amount, down payment, and purchase price that fits you within your budget, it is now time to start shopping. On to the last video, Know Your Purpose. This is where you hone in and narrow down your search for what you want to buy or acquire. This will also help keep you and your sales agent or real estate agent focused on what you want, not what they think they can sell you. Thank you again for listening to Know Your Budget, Part 4 of the Borrowing Money Workshop. If you still haven't purchased the Borrowing Money Workbook, then now's the time to do so. It can be purchased through Venmo or PayPal at the link and QR code listed. If you're using Venmo for the payment, then search for the Borrowing Money Workbook. Remember to add your email address in the "What is this for?" text box. It's very important that you add your email address so I know where to email the workbook. If you're using PayPal, then check that the email address on file with PayPal is your current email address. If you have any questions, the email address is borrowingmoney@yahoo.com. Remember to like and subscribe to the channel so you can complete your workshop and not miss out on any important information. Thank you again for watching, and have a great day.